Hello and welcome to the 9 News Business Buzz, where we take up what's happening in business, why it's important to you and our economy. I'm Ryan Frazier, 9 News business expert and CEO of Frazier Global. I'm joined today by Amy Love of Essex Real Estate Capital Advisors. Amy, thanks for joining me.
Thank you so much, Ryan. Happy to be here.
You know, I'm really looking forward to this conversation, and this is a bit of a nuanced conversation for our viewers because we're going to be talking about real estate rates and real estate, interest rates and real estate for that matter. And Amy is an expert because she has spent 16 years in commercial real estate lending.
That's right.
And so you have a lot of insights and perspective that I think can help our viewers understand the impact of rates and both residential as well as commercial real estate. And as you know, Amy, all eyes are on the Federal Reserve this week because they're expecting an interest rate cut this week that could have huge implications for everything from mortgage rates to the cost of rent, as well as the ability to get commercial projects moving in our state. The Fed has also been navigating the fact that, as in their efforts to aggressively tame inflation, this new federal jobs report that revised down by over 900,000 jobs, that is signaling that our economy actually may be cooling faster than we thought. Amy, I'd like to get your thoughts. What do you think happens this week with rate cuts and why?
Sure. So we like to watch Fed Watch, and they're predicting, a 95% plus probability that the Fed will lower interest rates 1/4 of a point. They could lower them even more than that, but that would be a little bit more aggressive. They'll probably be lowering them maybe a couple times still this year, which would mean a lot for Colorado real estate. We've been under a lot of pressure over the last couple of years. As you know, the Fed started rapidly raising interest rates starting in 2022, faster than they've really ever done before in our lifetimes. And so that just put a ton of pressure on my industry.
Yeah, now let's start with the residential side of this conversation.
Sure.
We'll move to the commercial a little later. It's a strange market for renters in Denver. With, as you mentioned before, a wave of new construction has created a temporary oversupply, as you told me. And as a result, average rents have actually declined by 3.7% over the last year. So here's the question, Amy. That's great news for renters, but you've mentioned that landlords are facing some serious headwinds. So what does this combination of falling rents and higher costs mean for the future of construction with respect to new apartments, multifamily in our state?
Yeah, so you're right. We have seen a wave of supply coming online for new apartment buildings. I'm sure you've seen them all over Denver. But that's created a situation where these apartment owners are competing for tenants, and so they have to lower rents or maybe offer some free rent periods to get tenants in. So that hurts them on the income side of things. But another headwind is expense growth has been very significant. So taxes, insurance, et cetera, which for apartments, they don't always pass through to the tenant. So that's really squeezing the margins for apartment owners. And then you add in higher interest rates, higher cost of borrowing, and that just compounds the issue. So we've seen the apartment market see a lot of stress over the last couple of years.
So let's break this down. So on the one hand, it's been a good market for renters because there's an oversupply. So if you're a renter, you're able to find a more affordable apartment perhaps these days than you have in years past.
Not used to being in the power seat.
Exactly, right? But on the other hand, for landlords, and I think this is fair to point this out, many of them are dealing with a tighter environment, right? Costs are up in general. You mentioned things like insurance. We covered that on the Business Buzz last week. A lot of cost pressures, but yet an inability to really address those. So they're working on thinner margins than typical.
Right.
Yeah.
That's exactly right.
So let's kind of segue into the for sale housing market, because I think that kind of is a natural tie here. For home buyers, we're seeing a more balanced and buyer-friendly market. We've touched on that in the Business Buzz as well, with the median home price down in Denver nearly 5% over last year. You've also mentioned that many sellers feel stuck with respect to being able to sell their homes because they don't want to give up that existing 3% mortgage that they have today. I know we fall into that boat at our household as well. If the Federal Reserve does cut rates this week, how much does that help unstick the for-sale market for both buyers and sellers?
I think it really unlocks the housing market. So like we mentioned, sellers aren't listing their homes for sale because they don't want to leave their 3% mortgage rate, which is totally understandable. So rates today are in the sixes, so you're doubling your interest rate. And if you add in the increased taxes and insurance too on the homeowner side, your monthly payment could be double what it's used to. So it's made home ownership feel very unattainable for a lot of Coloradans. So, lowering interest rates and making mortgage rates lower can really unlock that market.
Yeah. Okay. So now, commercial side. Let's go there because I know this is a specialty for you, Amy. You've shared a stunning statistic about the commercial real estate market. Transaction volume is down 77% from its peak. Again, that's COVID factoring in there.
Right.
But that shows still, regardless, a massive disconnect between what sellers think their properties are worth and what buyers are willing to pay. So, how much could a rate cut help bridge this 77% gap and re-energize investment in Colorado's commercial properties?
Sure. So rate cuts should mean more transaction because more capital is flowing back into Colorado commercial real estate. So right now, with all of the headwinds against commercial real estate, in some cases, rent growth slowing or even declining, like in the apartment market, expense growth, growing very significantly, and then interest rates being very high. So the cost to borrow money to, say, buy a retail property or buy an industrial property just really thins the margins and makes it pretty unattractive for investors to come and want to spend money in commercial real estate. So while it doesn't solve all of the headwinds against commercial real estate, interest rates being lower would certainly help navigate the landscape a lot better.
Now, as we start to wrap up this segment, Amy, now it's important, I think, for folks to understand, like, some may say, why do I care about the commercial real estate side? But there are implications, right? And you told me before that one rate cut may not make as big a difference, but a series of rate cuts, which we may see this year, could have a huge impact. Why is rate cuts for commercial real estate so important?
Well, it's really important because we want transaction volume to be higher. We want land development and construction, new projects to be happening. Back, over the last decade or so, we've seen Denver really grow into a bigger, fun market where there's, new restaurants and things like that. And so, with these transactions create higher property value, which is really good for Colorado communities because of, higher property tax revenue,
right,
which then we can invest in schools and infrastructure.
It has implications for infrastructure, for schools, for jobs, for retails, for restaurants. So getting more movement in our state is good for our economy. It's good for people.
Yeah.
All right, Amy Love with Essex. I want to thank you so much for joining us. We got to wrap up this segment. The Fed rate cuts aren't just a Wall Street story. They're a story about young people being able to buy their first home, apartment buildings being able to go in the ground, where the Colorado economy creates jobs, not just for today, but for the future. As business buzzes in Colorado, our goal is for you to stay informed, be engaged, and get ahead of the game. So be sure to stay tuned for more in-depth business news and discussions on the Business Buzz. And we'd like to hear from you on business topics and issues that you think are important for us to talk about. So text us at 303-871-1491. That's 303-871-1491 to help us shape the business stories you want us talking about. Again, Amy Love with Essex, thanks for joining us. For the 9 News Business Buzz, I'm Ryan Frazier.